Hi everyone, welcome to my stock trading simulation news impact on NVIDIA and SPY presentation. In this presentation, we will explore a discrete event simulation model which will show us how sentiment-driven news impacts a stock price. Why? I decided on this topic after witnessing extreme market volatility. So I wanted to dive deeper into the market behavior and sentiment and saw that news was a big factor driving prices. Here's a brief overview of my simulation. My event, the news coming into my simulation system, will trigger and generate a sentiment signal. That sentiment signal will affect the stock prices. And lastly, the stock price shift will trigger an entity to either buy, sell, hold, or hold a stock. I mostly focus on price change for my analysis results. This is my initial clouded simulation sketch, where you can see two entities arrive, their decision process, the cues, where the news is either positive or negative, or the trader either has to sell, buy, or hold. The cue where they both interact, which is the sentiment cue. From this, in general, if sentiment is positive, the price will go up. If sentiment is negative, the price will go down. Similarly, in the sentiment cue, the assumption is that if prices go up, then the sentiment is positive and hence the trader buys. Additionally, if the prices go down, then the sentiment is negative, then the trader sells. Else, if there's no price change, then the sentiment is neutral and the trader holds the stock. After that, both exit the system. Here's a list of my key simulation parameters. Due to memory space and how large these data sets can be and difficult to process, I narrowed it down to a 1 week simulation with minutes per day for a total minutes of 1,950. The price is set to 500 for NVIDIA and 400 for SPY. This is just an average that I came up based on data. News event probability at 5% per minute. The sentiment randomly driven for as positive or negative. The price change on news at 0.5 or 2 units up and down. And SPY price noise at normal distribution with mean 0. This reflects the conventional approach in financial modeling. And finally, the action logic, which is buy, sell, or hold based on the price movement. Here you will see the simulation logic workflow, where we start with the news event coming in that updates our NVIDIA price to either go up or down based on the sentiment being positive or negative. And then that in turn triggers our entities, the traders, to either buy, sell, or hold the stock. In comparison to the SPY prices not moving because that's just a constant, not affected by news. Let's take a look at the results of my simulation. So for news sentiment, as mentioned before, positive news triggers a buy, negative news triggers a sell, and neutral news triggers a hold. Additionally, price direction on sentiment. Positive news brings the prices up, negative news brings the prices down, and neutral has no change in prices. You will see this in the following graphs on the next pages. And lastly, NVIDIA versus SPY. Positive news drives NVIDIA up while SPY stays flat or decreases. So there is no correlation between both stocks, and news does seem to affect the stock price of NVIDIA. This bar graph portrays the news sentiment over time. It's showing us how much positive or negative news came in over time. In this graph, you will see NVIDIA price correlated to news sentiment. This chart shows NVIDIA price fluctuations correlated with sentiment changes. So positive news pushes prices up and negative news prompts declines. As you can see from the graph, the blue dots are the positive news, where you can see the prices pushing up with the positive news, and in contrast to the negative news, in the red dots, you can see it has a slight push down with negative news. In this graph, you can see the comparison between NVIDIA and SPY price trend. So SPY reflects random market noise with no news-driven shift. Portrayed with the blue line, that is SPY. As you can see, it's shifting down towards the 500s and then starts shifting up towards like the 1000s or 1500 time frame. In contrast, you can see NVIDIA pushing up and continuing to push up in those time frames. Now, that is just showing us NVIDIA's reactive behavior to the news. The previous graphs were run on my simulation parameters of 1 week and minutes per day. After extracting real market data, I ran into processing issues as the data was too large. So for these results, I changed the parameters to 2 months daily data and collected 2 months of Yahoo Finance headline news. So the results were the following. For negative news, creating a negative sentiment, there was a small but consistent downward price movement. For positive news and positive sentiment, there were too few points to conclude, not enough data. And that was not showing a strong effect. And finally, for NA or hold or unclassified news, the price changes varied, and there was one large outlier, as you can see here at the top. However, I concluded that the outlier could be classified as positive news. Now, further refinement has to be done so that the Yahoo Finance news would be correctly classified as positive or negative. These were the results of my NVIDIA and SPY comparison with updated parameters and using the real data. You will see that SPY is not correlated to NVIDIA, so the lines show that they both move independently of each other. Meanwhile, NVIDIA immediately after a news event portrayed by those black dots, the price has some sort of shift. So you will see that in shortly before April 1st, there was a news event coming in and the price dropped. Similarly, in April 15th, there was a news event coming in and the price dropped. And in April 29th, there was a news event there, but I didn't have enough data to graph that. Now, after verifying what type of news event happened on these dates, it seems to be they were negative, and so that tells me that the negative news did affect the price and bring the price down of NVIDIA. And now, just to point out again, I do need more data to further analyze this. Both my simulation with initial set parameters and my simulation with real data confirm that overall negative news shifted stock prices down, while positive news shifted stock prices up, highlighting the positive and negative sentiments on this volatile market. However, I have concluded that further refinement of the model must be done to incorporate more news events with larger date scopes, to refine sentiment assignments based on headline keywords. Additionally, I want to expand the scope by simulating additional stocks and cross market interactions. And lastly, use large data sets for both price and news events. This concludes my presentation. Thank you.